Welcome to Ben Talks Money. Here we discuss stocks, investments, ETFs, and personal finance.
Hello there, and welcome back to Ben Talks Money. My name is Ben. I have an MBA in Finance and Management. I've been trading for 8 years, and I'm a full-time options trader. So if you're new here, please subscribe to the channel, like the video, and humbly, please help me get to 4,000 subscribers. I'm getting close, and your subscription will go a long way in helping me get to that goal. So in today's video, we are talking about Palantir. They reported a strong earnings on Monday night, and the stock is down. At some point, it was down almost 10%. So we're going to take a look at the fundamentals and a little bit of the technicals. We take a look at the chart, the daily chart, to see what's going on with Palantir and whether it's time to buy now or just wait a little bit. So let's get in. First of all, let's dive into why this stock is down today. So Palantir reported a really strong earnings. They beat on the top, bottom, and all expectations on Wall Street. But yet the stock is down. Why is that? There are a few reasons why the stock is down. First of all, is the overall AI trade. There has been a lot of talk about AI being a bubble, and it started to filter into Wall Street. The stocks have gone up so drastically this year, and any hint of a bubble or the bubble being burst will cause panic on Wall Street, because Palantir at some point last year was about $20, and it's right now trading up around 190. So if you got in at that point, you've made so much gains that there's no point risking losing all of it. So what you saw after the earnings was partly panic and also profit taking. And the other one is the valuation. That's the sticking point for Palantir. The main sticking point for Palantir is their valuation. Right now, the stock is trading about 250 times their PE, their forward PE. So forward PE is what Wall Street expects the company to make in the next year, usually in a 12-month period. So Wall Street expects Palantir to be making about 76 cents per share next year. So that being said, Palantir is right now trading at $190 per share, roughly around 190, 192. What it means is that if you divide the $190 by the 76 cent expectation, it means the Palantir is the most expensive, if not one of the most expensive stocks on the stock market. It's very expensive, but what is helping them is that they keep beating expectation. But it doesn't negate the point that it is expensive. If you are going to buy a small company for $1,000 and they tell you that, okay, we are selling the company to you for $1,000, but next year we are going to make $25, what will you say? Are you still going to put $1,000 on a company that's going to make $25 next year? Absolutely not. That is what is going on with Palantir. The expectation is 76 pence per share, and the stock is trading at 190 right now. The entire stock market right now is very weak. There are just about a few stocks that have been holding the market for the past couple of months. It's your Nvidias, your Palantirs, your Apples, your Microsoft, your Metas. These are the stocks that have been holding the market for the past couple of months. And if something were to go wrong with them, you can guarantee that the market is going to correct itself at least 10%. And one of the signals that we saw on Monday were the risky stocks coming down. What I mean by risky stocks are the companies that have gone up so much this year and they have no earnings to show for it. And these companies are your quantums, your rare earth metals, your uranium stocks. Those stocks you could see on Monday that all those stocks were coming down. The notion that the AI bubble is going to burst at some point will cause panic, especially for those who have made a lot of money on these stocks. And right now, if you also look at the overall economy, the macro economy, it's not looking good. Let's be honest. The shutdown has been going on for a month now, and you look at all these SNAP benefits and layoffs going on. Amazon laying off about 15,000 employees. You have other companies, Target, laying off employees. It is just getting started. These tech stocks, they are all known as the growth stocks. Palantir doesn't pay dividend. The reason why investors buy these kind of stocks is because they are growth stocks and they perform. They beat expectations all the time. And if you look at the fundamentals, Palantir has a strong fundamentals. It's not their fault that everybody wants to buy their stock. That's why the stock is trading at 250 times their forward PE. But that's not their fault. But at the same time, if you're an investor, you have to be a little bit cautious at this point. So, should you buy Palantir right now? The answer to that question is it depends on your goal. First of all, if you are somebody who wants to hold a stock for the next 5-10 years, and you believe in all this AI hype that companies are going to deliver, not just Palantir, but all these AI hyperscalers, they are going to deliver. And you believe that AI is what it is. You can buy at least a startup position from here. But if you are somebody who just want to swing the stock for a couple of months, maybe you want to catch an end of year rally and cash out, then you have to be cautious. Let's take a look at the daily chart. If you look at the daily chart, you can see that this stock has been doing incredibly well. But when it comes here, this is where it matters most. I do a watch list every week of the stocks that we'll be watching for the week. And last week, we had Palantir on our watch list. We were looking for this stock to break this area, 185 area. It consolidated for a long time, and we were looking for the stock to break that consolidation. And it did. It broke. It went all the way to 208, and then it pulled back. But if you look at it, if you look at the daily chart, right after the earnings, this stock dropped almost 10%. But look at what happened. It came straight into the 184 support zone and it held it. And now it's trying to form a hammer candle. So basing your thesis on just the technicals, basing it just on the chart looks like it's a good buy, right? From here, because it held the support, it's pushing up. And if it's able to hold above 185, it's a good entry to get back to all-time highs. But on the other hand, if you look at what is going on with the rest of the AI stocks, first of all, look at NVIDIA. That is one of the yardsticks that you have to look when you are looking at this overall stock market right now, because NVIDIA is the darling of the AI stocks. NVIDIA is well positioned to make the most out of all the AI stocks, right? And if you look at this here, if you are a trader, what does this tell you? This is a bearish candle. This is a bearish chart. It tried to break above the all-time highs of 212. It failed, came back here, tried again 3 days later. It failed, and now we are pushing back. So if the stock comes here and it breaks below 200, which right now, as at the time of recording, is trading around 280 cents. If it breaks below 200, which will be easily done if AMD falls after earnings. AMD earnings after market on Tuesday. And that is also one thing to look at. If AMD disappoints and the stock fails, NVIDIA is not going to be an exception. So if you are looking at the overall market, it doesn't tell me to buy right now. And let's look at the QQQ. The QQQ is the NASDAQ ETF. It tracks the NASDAQ 100 stocks. If you want to buy the NASDAQ, just buy the QQQ and you are good. Look at this one to tell me if this is a bullish chart, because you can see that it is forming an inverted. This candle right here is becoming, this candle is becoming what we call an inverted hammer. And that is a bearish candle. So ideally, again, if you are looking to hold Palantir for the next 5-10 years, then you don't have any worry. As long as you trust the company, you trust that this AI is going to be what everybody's saying is going to be, then you don't have an issue. But if you're looking for a swing, what I would say is they just started the earnings. The news is still fresh. The market started falling today. What you have to do is give it a little bit of time. Let this settle down. Let the selling be exhausted. And even if you are trading options, you have to let the stock settle down. Let the volatility decrease. When the volatility decreases, the implied volatility for the options will also decrease, which will help you get a premium at a lower price. Because right now, the stock is still volatile and the premiums are still high. So give it up to the end of the week. Today is Tuesday. Give it up to the end of the week. See where the stocks are going to be. There could be an end of year rally, but the next couple of weeks, we might see some choppiness or a downside before we go up again. So that is it for the video. Palantir is a great company. They have strong fundamentals. No other company is doing what they are doing. When it comes to the software side of the application side of AI, nobody is doing what Palantir is doing. Nobody comes close to what Palantir is doing. That's why everybody wants to buy the stock, right? The same way NVIDIA is to the hardware side, when it comes to the software side, nobody comes close to Palantir. So that's it for the video. If you are new here and if this video was helpful to you, please hit the subscribe button, like the video, share, tell a friend to tell a friend. And until next time, let's keep talking money.